What is happening, everybody? It's your boys, Sean McLaughlin, Steve Straza. I'm going to just warn you guys right now, we may lose internet. You probably can't hear it or see it, but outside my windows right now, it is crazy hailing, thunder, lightning. It is unbelievable. It doesn't rain like this in Colorado very often, and it's coming down.
If you lose internet, I'll just ramble about bullish spaces.
Please do. But hopefully the internet holds, because I'm curious to hear what you've got pumping today for the in the flow report. I just put a new trade on for All Star Option subscribers, but I'd love to. I'm looking for some more ideas. I'm stressed. I hate to say this, but like I feel like I want to get into some trades and some small caps. I want to get into some things that are off the radar. This bull market is only just starting to become a thing that people outside of all-star charts are aware of. And I feel like there's legs coming, man.
I hear you. And the data certainly suggests that much right now. Like we got that bullish rotation last week, really began the week before. But this week's list, I got to be honest with you. I have the table up on my screen here. It was a little bit disappointing. It was a little bit narrow in terms of it's mostly growth stuff. So I'm not going to be able to fulfill that need of yours for some more small cap exposure here. It's mostly tech and growth. But we went through the list. We found the two best ones. We're already long them. And I had a discussion with the analysts this morning, and we were thinking, do we kind of stretch a little bit, maybe put one on that we don't like as much? And I said, no, let's just go talk about these two that we're already long because they're so good. And after a base resolves higher, it's not that you can't get back in unless it retests the base breakout level. That would be foolish, right? Because the best base breakouts won't retest. So we have to kind of find a way to get into these trades. And I have two good examples today.
Ooh, let's see them.
Up first, Shopify. This base really, if you want to define it at the August highs like we have, and then the Q4 highs from last year, this base went a long time ago, undercut the base breakout level, scooped higher, and then really erupted on the most recent earnings report. So for something like this is Shopify, right? See the downtrend on the left-hand side of the screen, sideways trend, or the base here, resolution, the decisive resolution here with the gap high after earnings, and now we're just coiling. And it's kind of pushing to a new closing high, I think, right now. You have the live data, I don't.
There, yeah.
Draw it like this. So I zoomed in on this one, and I apologize for all the colors, but there's a reason for it. Yeah, look at that candle today. It's up like 6%, right? So it's going. I have resistance drawn here at 64.50 on this little, call it a bull flag, call it a pennant. It's a short-term continuation pattern. So I think the point here is, like, on the first chart, I have longer term levels drawn with a target at 82 and another target at 117, 118-ish, right? And I guess my point is you don't need a retest of this base breakout level of 45. You're not going to get it. You're probably not going to get it at this point, right? This one has all of the key characteristics we look for in a bearish to bullish reversal pattern. They're drawn in green here. So you just want to get in, and you can get in, define your risk at 64.50, pivot highs of this little continuation pattern, and then use the targets 80. What did I say? Yeah, 82. Gives you more than 25% upside, right? It's not bad.
This is a trade that Kimmy would love, right? With a stop at 64.50, which right now, if you look on my chart, it's on today's prices, that's only 64 cents away from right now. Like, that's like a short-term trader loves that kind of risk reward, right? Like, if we're wrong, we're going to be wrong quick and we're out. But if we're right and we're willing to swing it, like, there could be a good move, a big move here.
And here's the lesson, right? Everything in markets is a trade-off. So, and trust me, I get the emails. Investors and clients will say, there's no upside here. 20, 25%, I want more than that. Well, guess what? First of all, it's a short-term continuation pattern. Continuation patterns, by definition, are more likely to result in a winning trade than a reversal pattern, right? So buying the base is just, by definition, a lower probability trade. So there's your trade-off, right? You might get a larger profit potential trading the base breakout, but there's a lower probability or a higher probability of the pattern failing. This one, you have a lower probability of the pattern failing, but the trade-off is you might have to take a little bit less, right? Because it's already in the middle of its range. And that's
This is a very timely time to have this call in this chat, because I mean, I got the intraday chart for today right here on my screen, and you can see we broke decisively above 64.50. Right about that's 9:50 my time, so that's 11:50. So let's just call it noon Eastern, right?
Coiling up there. Look at that, beautiful.
Yeah, so it just happened. It's coiling. I mean, bam! You can really get into this trade with very little downside risk. Again, if you're wrong, we'll be wrong early. It won't hurt that much, but if we're right and we're willing to hold it, bam, this thing could go, this thing could move. And the options are cheap right now. If you look at my chart here, the bottom right side of my corner, the implied volatility is cheap. So you can buy some calls. And even if you are, and I don't recommend this for people that often, but when you have the timing right, like we do right now, there's nothing wrong with going super short term on this, right? Like, look at these options that expire end of this week. You could buy the 66 calls right now for $1.50. If this thing moves, it's going to move more than $1.50, right? If it breaks out, I'd be hard pressed to think it wouldn't move more than $1.50 between now and the end of the week.
High risk trade, right? Disclaimer: high risk trade. If God forbid you wake up tomorrow and this thing's a failed breakout, this flag that we're talking about, you probably lose everything, right? We're talking about a trade that expires in 4 days.
Yep.
But like you said, if this bull flag goes and you get 3 days of, continuation, and this thing's at 70, what are you, 3-4x by Friday?
Yeah. You know what, Straza? I'm writing. I got my pen here. I'm taking notes. I'm actually going to do this trade when we get off this call. I'm buying it. I'm buying these weeklies right here. I'm telling you right now, you guys can front run me if you want, but I'm buying these 66 calls right here for $1.50.
If we hit the close, I'll buy it with you, and we'll talk about it next week. I think that'll be an awesome exercise.
All right.
Stick this close. I'll get in it. Yeah, we'll do it right. We'll do it right after.
So you're saying if we're above 64.50 at today's close, you're buying. That's what you're saying.
I'll go in at 345, and if we're above 64.50, yeah, I'm in.
All right, I like that. You know what? I'll be patient and I'll do that with you.
But look at this 1 minute chart, you junkie. Look at how the volume comes in at 64.50. Right? You see the volume come in there? Put your
boom right there. Yeah.
Oh. Listen. Here's the moral of this story is simple. When we think about the best looking stocks right now, not the best looking setups, but the best looking stocks, they've already resolved higher from these bases, right? We didn't just start talking about these bases last week. Been talking about them for months now. So the best ones might have already hit one price target. Look at something like Google, Apple, Nvidia, right? And they're on their way to either their second price target or they're already at all-time highs, right? And we're drawing a whole new Fibonacci. If you're just buying the ones that are now breaking out of their bases, it's not that that's a bet. It's not a bad strategy at all, but you're probably missing the leaders that already broke out of these bases 3 months ago. And this is just one way to get into it. As technicians, we're very lucky. We can be flexible. We have a huge toolbox. So there's no reason not to go and find a bullish continuation pattern. If you can define your risk responsibly and you have enough upside, you can more than justify putting trades on in stocks that have broken out from their reversal patterns months ago, right?
Yeah, look, I love this chart for a lot of reasons. A big reason being that a lot of charts similar to this have been working for us recently. So, hey, man, if it keeps working, I like to keep doing it. I keep liking to, whatever's working, I like to press it, right? That's a good philosophy in trading, in life. Do more of what's working, less of what's not. These keep working.
Can I tell you something?
Yeah.
This is my best position since last year. I bought a lot of these bases last year, but I did something different with Shopify. And we wrote about this trade in one of the columns, like late last year, last fall. I bought the failed breakdown. I got in around $30 on this one. You see it? Show the daily. I don't have it really drawn good here. But there was a shelf of lows in like April, June, July. We undercut them. We hung out down there for a while. See it? Right around 30? No,
yeah.
Down by 30.
Wait, we're April.
Yeah, last April. I'm talking.
Oh, last April. I'm sorry. I'm looking at the wrong year.
I bought the failure of that breakdown.
All right, my chart only goes back 1 year, so
but you can see it on the left-hand side.
We're on June here.
Yeah, you can see that the little pivot lows on the left-hand side of the chart. When we scoot higher back above there.
I gotcha. You got shaken out right here. This is what you bought right here, August.
Nope. Look at the pivot lows. I bought the bull hook breaking back above. That's a failed breakdown where your mouse is right now.
Right. Gotcha.
And when we cut back above those shelf of lows right around 30, that's where I entered last year.
Look at you. Well done.
But it worked. Yeah. It's not something I would usually do, but
yeah. All right. Well, hey, speaking of things we don't usually do on this call, we don't usually get into really short-term trades, but hey, give the kids what they want, Straz. Everyone's trading the zero DTE options right now, so why don't we jump on the bandwagon? This isn't 0 days to expiration, but it's as close as we can get with Shopify. We're looking at June 16th options that expire this Friday. I like the 66 calls, maybe even the 65 as it pulls back a little bit. Maybe we buy the 65s for, $1.90. I don't hate that either.
What were the first ones you said? The 70s? No, that's too much.
We first looked at the 66s, basically, just slightly out of the money that we were talking about buying them for $1.50. But I'm, I'm playing for a pop. What's that?
25 Delta, we would have to go all the way to what, 69?
25 Delta, we'd be looking at 69, and they cost about 67 cents on the offer.
Yeah, but see, this trade. Yeah, I think 69, probably fine, but that's a little bit.
The reason why I'm going closer to the money, like at the money, is just because we have such a tight stop loss on this, right? We're going to get out if we're below 64.50.
We shouldn't have to lose everything, you're saying.
Right. Exactly. All right. Well, that's our trade idea for this week. Way to put that together, Straza. And I'm glad my internet held out. It's still raining and hailing like crazy outside. It's amazing.
And I want to hear from the viewers and clients about, if this is something you're interested in, because internally we're flirting with the idea of doing something more around, shorter term options, some sort of a trading options product.
Yeah, if that's what the kids want, let's give the kids what they want, Straza.
I like it. I never thought it'd be something that anybody else would be interested in, but we'll see.
All right, everybody. This has been the Flow Show. He's Steve Straza. I'm Sean McLaughlin. You could follow both of us on Twitter. He's at @SStraza. I am Options Sean on Twitter. Follow us. Say hi. Say hello. Have a great trading week. We will talk to you again soon. Take care, everybody.